Right, ladies and gentlemen, good morning. Welcome back. It's great to be back in Singapore, I think, for many of us. Singapore is seeing a strong surge of people, talent, and businesses coming, and I think talking to different industry players, we believe there are probably 40 plus managers or so looking to set up in Singapore. And I think it's a story of business expansion. People are looking to use Singapore as a base to harvest talent. Some managers may be pursuing an Asia, Pan-Asian strategy, a China plus one strategy. So Singapore being a natural springboard to India, Indonesia, all very exciting places. So today, joining me on stage, I think we have two very fine gentlemen who represent the best of Singapore. And I think Singapore is a microcosm of what's happening in Asia, where all the action is. The two gentlemen next to me represent two generations of leadership. One is an industry pioneer, a senior statesman. The other individual represents the next generation of leadership. They both represent firms with very different strategies. 𝐻𝐸𝐸, who is the CIO of APS, is a bottom-up equity research firm with a Pan-Asian focus. Suhaimi comes from QuantEdge. He's the CEO of QuantEdge. Systematic quantitative strategy and trade across many different markets. So at some level, it's man versus machine. And we're going to hear from them. They also represent two very important things, one of which is an entrepreneurial bent. I think 𝐻𝐸𝐸 left and started up his own firm many, many years ago. Suhaimi left a career as a corporate partner in a top law firm, and they all went down the entrepreneurial path. So lots of things we can discuss today. I'm very excited to have both of you join us. 𝐻𝐸𝐸, I want to start by maybe asking you to briefly introduce yourself and your firm, please.
Yep, I'm the founder and CIO of APS Asset Management Company. We started as a Pan-Asia Pacific manager, but about 3 years ago, we repositioned the firm as a China manager. So today we have two long-only China strategies and one long-short China strategy. Singapore is our headquarters, and we have 3 research offices in China.
Thanks, 𝐻𝐸𝐸. Suhaimi, I'm going to ask you to do the same. If you could just briefly introduce yourself and your firm, please.
Thank you, 𝐿𝐻𝐸𝐿. Well, as 𝐿𝐻𝐸𝐸 mentioned, I'm the CEO of QuantEdge Capital. We're a Singapore-based quant hedge fund. We've been around for 16 years. I usually tell people, that means we've been around the block, we've been around a long time, but then when I sit next to 𝐻𝐸𝐸, then we think, no, we're the newbies here, right? But it remains the case that when we set up the firm here in Singapore 16 years ago, we were one of the first quant funds, not just in Singapore, but in the region. We've grown basically a fair deal. When we first started the fund, it was just $3 million of friends and family money. Now it's running at close to $3 billion. So I think we've done fairly well, I suppose, in the last 16 years.
Right. So both firms, I checked in with them backstage. The markets have been wild, but the AUM both firms range from anything from $2, $3 to $5 billion, depending on the time of the day, as you can appreciate. But I think the important distinctive point is they both represent independent firms headquartered out of Singapore. I think in the land of giants and ever-growing platforms, it'd be really good to hear from both of you. I know both of you spend a lot of time managing your businesses, talking to investors, watching the market. So I'm going to jump right in. And really, as you said, both of you have very long tenures with your respective firms. In fact, the two of you combined represent more years on this planet than I have been on this planet. So I'm very excited to ask you by just asking 𝐻𝐸𝐸, for example. You started your career 40 plus years ago. I think you were a pioneer early day employee of GIC. So I want to ask you, how did you get started in the investing business?
I started my career with 2 very large investment firms. So after having worked for 10 years, I felt it was about time for me to come out and set up my own asset management company, doing investment work the way I think it should be done. So that was in 1995.
Okay. And obviously, you're still around in business. The lights are still on, so that says something since 1995. Right, well, let's dig into that a bit more, but I want to turn to Suhaimi. So Suhaimi, you were an equity partner in a top flight law firm. What's your journey into this business?
You know, I don't tell people this often, but I started my sort of relationship with QuantEdge first and foremost as an investor. So I was one of the investors in the earlier years, you know, convinced about the strategy, sort of made sense, made me some money. And it was just a couple of years in being an investor that the founder said, you know, you'd make a pretty good addition to the team. We're growing. At the time, we were running about $500 million in 2013 or so. And that's when I joined. At first, you know, to look after legal compliance matters, and then operations and risk, and so on and so forth. It was the ultimate scope creep, right? It was bit after bit of more and more of the firm, and eventually I became CEO in 2018. So it's not as if I was thrown into the deep end, but I guess I went in straight away, sort of aiming for the deep end,
right.
and really sort of began to enjoy more and more of it as I went on.
Okay. Oh, that's good. You were a true believer from day one anyway. You believe in eat your own cooking, if I could put it that way. So I want to turn to a broader theme about being a business builder. Obviously, both of you have a hand in building up your businesses from the ground up. So I want to turn to 𝐸𝐸𝐸. 𝐸𝐸𝐸 APS has been your life's work, right? You started this in 1995. That's probably before many of us in the room were even born. Well, some of you anyway. So I want to ask you about some of the early challenges when you started APS. I think there was the day even before the internet, or just as we were, those of us old enough to remember Netscape, we're just getting on the Netscape browser, before the smartphone era. What were some of the challenges in starting up the business, fundraising?
Probably three factors. One is to build a credible investment team. Two, an investment process, because APS manages predominantly institutional assets. And therefore, you need to build an investment process that appeals to institutional investors. Three is performance. On performance, I think it's more important on what you do, in a difficult year, because investors are more alarmed by you, for instance, changing your investing style when the numbers are sluggish, rather than the numbers themselves. Yeah.
Right. Well, I guess it makes sense. It's a bit like in a relationship. Nobody likes surprises, right? So it's not necessarily the bad news, but as you said, you want to stay consistent. You want to watch for style driven.
Yeah.
Yeah. Well, so obviously APS and QuantEdge both are very institutional investors and institutional investors from all around the world. I want to ask Suhaimi. So your firm is a classic two-man and a dog plus a Bloomberg terminal kind of startup. How did you go from a startup to where you are today, being an institutional setup?
Two men and a Bloomberg terminal. Those were the good old days, right? I don't think you can do that anymore.
It's sort of date references. I don't think anybody starts a hedge fund that way today, but
yeah, it's a lot tougher now to start a hedge fund. I think it was possible then, and obviously we've grown over the years. I would say that from day one, the philosophy of the founders hasn't changed. We've always wanted to devise a strategy that we were happy enough with, that we could invest our own money in, right? And that means that we want to compound capital for the long term at an aggressive, but a rate where we'd be happy with the sort of risk-return sort of proposition, and that's always been the case, which has allowed us to target and deliver a return in excess of 20% in the long term, and that's really been in many ways our key differentiator, right? Although we say, of course, we want a lot of investors, we'd love to have institutional investors, but I think in many senses the product defines the kind of investors that will be drawn to it. And so in many of our early years, for instance, most of our investors were peers, high net worth individuals, many of whom are from professionals. And in later years, we sort of started to attract the bigger family offices, and in more recent years, the institutional investors. Right. But the philosophy remains the same. We're taking significant risks, we're delivering high returns, but it's highly volatile. So it may not be suitable for everyone.
Yeah, yeah. racy returns, but I think your investors have kept faith with you over the years. So, right. So let's maybe just expand this theme of business builder just a bit more. So, 𝐸𝐸, I think we spoke about this. You are still in business after so many years. So what's the secret to the longevity of the firm?
I think it's still the three same factors, i.e., your investment team. In APS, we try to build a star team rather than star portfolio managers. And therefore, even if 1 or 2 or 3 staff were to leave, the remaining team can still continue to do, the investment research work and also produce the investment performance.
Right.
2, I think, is probably your investment process. A process that's rigorous enough to hold up cycle after cycle over multi-cycles. More importantly, I think, in a bear market, like for instance this year, it must not collapse. Sometimes, a style will just collapse with the collapsing market. And 3, obviously, is performance, which is the name of the game of our business. Obviously, it's impossible to outperform every year. So in APS, we try to do well maybe 4 years out of 5.
Okay.
So if you can do these things pretty well, I think you will continue to be around, regardless of what happens in the markets that you operate.
I think that's such a powerful point, right? Because even at an individual level, if we can just be 0.01% better every single day consistently, even 4 or 5 times in a week, you get better over time, the compounding effect. So I think, 𝐸𝐸, you're absolutely right. I think sometimes being around, longevity is a bit underrated when things blow up around us. I think we've seen that happen in the financial markets over the last couple of weeks, where you could go from $32 billion to 0 quite overnight. So congratulations on still being around since 1995. I want to ask QuantEdge, Suhaimi, the same question. So your firm has a very distinctive culture because you are known to hire people very young. Many of them join your firm as your first job, and they grow up in the firm and they stay around. So based on my research, many of them, when they do leave your place, they join other industries. So they're not really joining a competitor. Do you want to speak a bit about the culture of a place? What is your secret weapon in this war on talent?
Secret weapon. Well, I would say, first of all, I don't think we sort of purposefully set out to say we want to retain people. Right? We go about it slightly differently and say, look, we want to train people and we want to treat them well. And the purpose of that is to make sure that whilst they're with the firm, they perform at a very high level, right? And they're happy. And as a result of that, as a consequence of that, people stick around because they realize, hey, it's a pretty good place to be, right? The people around are simple. The founders are very down to earth. I think senior management, it's a really sort of open culture within the firm where everybody sort of speaks to each other. We challenge each other to contribute no matter what seniority. So I think all that really adds up, as a result of which people tend to stay, which makes it easier for us. I think retention of talent is a strategic asset, strategic strength. But it starts with really how you treat people. I mean, we want the best for people, and as a result of which they give us their best.
Okay.
Yeah.
I think that's an important takeaway for the rest of us. So yeah, I think talent is obviously a big issue. So thank you both for your thoughts on that. Now I want to just move us to another theme, if we like. I call them the 3 C's. I'm going to ask our 2 esteemed gentlemen about China, crypto, and climate. I think those are the 3 big issues. So I want to start with 𝐸𝐸. 𝐸𝐸, you have been known to be associated with a couple of things. Number 1, you are well known to be a contrarian investor. You have been quoted as saying, don't do what others are doing, you need to stand apart from the crowd. So I'm going to give a plug for 𝐸𝐸, because based on public records, 𝐸𝐸 and his firm were one of the very early investors in China. I think way back before China was even fashionable in people's consciousness, I think you started your own China fund, dedicated China fund, in way back 2004 or thereabouts. in 2007, 𝐸𝐸𝐬𝐿 very publicly said that the market was over-exuberant and overvalued. That was somewhere in 2007, August, September, based on your publicly quoted remarks. And obviously, we all saw what happened in 2008. And you have also been known to be an expert on bubbles. I think in the Japanese bubble, in 1989, you said Japan was overvalued. You sold out on all your Japanese positions. I think back then you were the head of Citigroup Investment Management in Tokyo. So this man knows what he's talking about. He's a man of great timing. I think life to be too early is as bad as being too late. So I want to now ask you, 𝐸𝐸𝐬𝐿, about China, because you spent a lot of time living and working there. And I think several years ago, you made a contrarian bearish call on the Chinese internet sector. So today we're seeing, I may be overgeneralizing, but I think Chinese internet stocks are down by around half versus their peak. So I'm going to ask you to make a call today very publicly, and I know it's being recorded. So what's your view on China today, based on what we know? Yeah.
Well, tough one. After the party congress about 2 weeks ago, investors believe that Xi Jinping and his new team will steer China back to the old Maoism days. And therefore, you remember, they dumped China stocks in Hong Kong and in NASDAQ. But I'm not too sure, right, about that view. I think I've expressed it also to my investors, because Xi Jinping has been the General Secretary and President of China for 10 years already, right? And I'm also not sure whether a man of his age would just change because there was a party congress. Yeah. Now, I think investors were alarmed at some of the things that he said, one of which was this term, common prosperity. Right? So investors thought that Xi Jinping will be the new Robin Hood of China, if you will. That is that he will, redistribute wealth amongst the people. But if you read the official documents carefully, their view of common prosperity is very different from maybe Karl Marx's view of common prosperity or class struggle. Right? Based on the documents I've read over the years, at least it's clear to me that it is about increasing the pie so that there's more to share amongst its stakeholders. That's one. And two, Xi and his team will still have to continue to develop the economy. Or put it another way, the number one KPI for Xi and his team would be economic growth. But this is what the Chinese care about. The Chinese are not, the average Chinese doesn't care very much about Maoism or Marxism or ism, whatever ism, right? Maybe I should add another point. Now, if you read the documents carefully, it is always mentioned there is modern Marxism. In other words, China must build a modern Marxism state, not just Marxism state. So what does this mean, modern Marxism? To me, it is Marxism plus capitalism, right? Deng Xiaoping used a different term, which is Marxism with Chinese characteristics. But because they are leaders of a communist party, the CCP, they cannot use the term capitalism. But if you look at China closely over the last 30 or 40 years, it is probably more capitalistic than maybe even Singapore, right?
Right. So just a quick follow-up on that. So if we can sum that up, I think many foreign investors take the view today, China is uninvestable. So if I can ask for your quick take, what's your view? Is China investable today or not?
I think firstly, over the next 5 years, China can still grow at 4 to 5% a year. And therefore, amongst the major economies in the world, I think the growth story in China is still quite attractive. Although, you will no longer grow at 8-10% in the past. And because the market has come down like 40% from its peak early last year, and because sentiment is still bearish, I think China is still investable. But not everything is good in China. And therefore, you have to do your research. Now, some of the companies that have done well in the past, like for instance, the internet stocks, may not do well, for many years to come for numerous reasons.
Right. Okay. Well, thank you for that. We'll check in with 𝐻𝐸𝐬𝐫 maybe next year and then see if some of the calls you made this morning will withstand the test of time. I want to take us to the next theme I mentioned, which is ESG and climate. And Suhaimi, you serve on the board of the National Environment Agency in Singapore. So that's the top-level government organization that looks after everything relating to climate and environment. I wanted to ask you, how does your firm think about ESG? And how do you integrate ESG into your investment decision-making processes?
Well, I think it's extremely important, and the firm thinks it's extremely important. So from a portfolio and investment perspective, obviously ESG can and should be applied by all investment firms, but its applicability would depend on the kind of strategies that you run, the assets that you invest in. And for us, admittedly, as a quant firm, we invest in many asset classes, right? You've got equities, fixed income, commodities, currencies. Well, you can't apply ESG the same way across all of these. But for us, what's really clear is you can and should apply it when you invest in single stocks, and that's where most people sort of initially apply it. So for us, it's pretty simple. Again, data-driven. So based on the ESG scores of companies, we make decisions on what to invest in and what not. But a note of caution there that it's still early days. I think for people like us, depending on data on ESG, it's tricky. Because the data is not really of good quality. There are holes in it. There are lots of companies with no ESG scores, which doesn't tell you anything. Are they good? Are they bad? How do you make investment decisions based on that? So I would say for us as a firm, there's a limit to what we can do, and certainly we're trying to push that boundary as we go along. But for other firms, I would say there's a lot more that they can do. Right? If you're talking about bottoms-up analysis, trying to understand companies, there's some ability there to make real decisions that have real impact in terms of driving the ESG agenda. Yeah. And I think in the investment space as well, when you talk about trying to shift the outcomes of the world, there's a lot that can be done when it comes to early stage investing, VC investing, PE investing. If people make the right decisions that have an impact on climate, I think that's where the real change will happen, as opposed to guys who are just investing in public equity space or fixed income. Very little effect there, I would say. But nonetheless, I think it's extremely important. So that's just one aspect, right, in terms of how you invest, and obviously that's the market or industry that we're in. But apart from that as well, we're all running businesses. I think that the small bits that we can do internally as a manager, incorporating ESG into how we run our business, not just most people sort of focus on the environmental side of things, but the social parts of things, how you give back to your communities, how you take care of your people, the governance side of things. I think there's a lot that individual companies within the fund management space can do.
Right. Okay. Well, we covered off China, climate. I want to finish up on one other substantive topic, which is crypto. I think hardly a day goes by without us having to speak about crypto and digital assets. So I want to ask both Suhaimi and 𝐻𝐸𝐬𝐫, just how you guys think about crypto and digital assets as a firm. Maybe 𝐻𝐸𝐬𝐫, you want to kick us off on this topic?
Yep. I struggle, to wrap my head around cryptocurrencies, because cryptocurrencies are supposed to play the alternative role to fiat currencies. But in their heydays, in a single year, they can go up a few hundred %. Right? And of course, this year they all have collapsed. Even the best cryptocurrency has underperformed the Sri Lanka rupee, right? The currency of a supposedly failed nation. So to me, cryptocurrencies are very much like a speculative asset class that we all have struggled to understand.
Right.
So obviously, I've not invested in any of them, partly because I just don't understand them.
Okay, that's fair enough. Thank you. Suhaimi, your thoughts?
I would say, I mean, you were saying that the day doesn't go by when people don't talk about cryptocurrencies. We got asked the question of whether we invest in cryptocurrencies and why we don't invest in cryptocurrencies. We got asked that question a whole lot in, say, 2019, 2020. 2021 is sort of petered down. No one sort of really talked about it. 2022, much less so. And then, of course, when something blows up, then everybody talks about it again. Our position has always been the same over the years. I mean, we do research in a whole lot of things, including cryptocurrencies. Is there a risk premium to be extracted? Because we invest largely to extract risk premiums from the markets, and we think maybe there is a theory there. But there are a lot of things I think that that are not in place yet for a firm like ours to invest in cryptocurrencies. Right? When we talk about being data-driven in our investments, the cryptocurrency space, the data is a bit patchy. It's only short-term data, only a couple of years. There's only real data when you talk about Bitcoin and Ethereum. Most of the other coins have far shorter lifespans. There are lots of issues in terms of regulation. Most of the exchanges are not really regulated well, as we can see from what's happened with FTX. And on the note of FTX, I would say, it may seem like something incredible that's happened, but actually the backstory is not wholly unusual, right? When you think about what happened, let's say in 2007 with MF Global, it's actually the same old story. It's a guy who's got a whole bunch of money, it's client money, and he's taken that from one pocket and put it into another where it doesn't belong. And that's a story that happens again and again and again in the financial markets. And I would say, and in the crypto markets, it's a highly it's a risk that's probably more prevalent because of the fact that there's less regulation and there's probably less transparency. So I think people got to go in with their eyes open and understand that it's not the same, the cryptocurrency markets and the financial markets today.
Well, thanks for reminding us historical lesson. I think that's date reference, all three of us, MF Global. There's a blast from the past, but absolutely apt reference. Now, I want to finish up, I know, in mindful of time, just want to finish up on the next lap of your life. Both of you are very established, been doing this for a while. So 𝐸𝐸, obviously you're 40 plus years and going strong, and you don't look like you're looking for a job anytime soon. So what's next for APS and yourself? How are you thinking about, say, succession planning, for example?
Obviously, I try to strengthen the firm, bit by bit. Now, we're spending a lot of time on succession planning and so on. And what I would not like to do is to bring APS to my grave, because in our business, very often, the asset management the boutique asset management company will die with the founder, which I think is a great pity. And therefore, I'll be smiling in my grave, if you will. The APS is still around after I'm gone.
Right. Thanks, 𝐸𝐸. Suhaimi, so I guess the same sort of a direction of travel for you in the sense that you serve on many boards of many public organizations and charities. So, it's like American silly season. Everyone is asking every politician, are you running in 2024? So I'm going to ask you, does a future career in politics beckon for you, and how are you thinking about public service?
No. I would say the answer to that is no. I mean, I suppose been asked that question before, but I think there's a lot more that me individually I can do outside of politics. But I guess in any case, I do believe in volunteering. I believe in giving back to society. I believe very strongly in skills-based volunteering. And one of the things that I see a lot now in Singapore that's growing, is the case of successful professionals making time to volunteer on the boards of charities and other organizations, non-profit side of things, and that's really helping sort of society and giving back to the community. So I think that's a trend that I support. I love to see that and highly encourage. So I would say, politics is not the only way to give back. I think there are many ways that we can and we should think of giving back.
No, absolutely right. You're giving back to the community and industry by joining us today, and two of our finest members of AIMA and the broader industry representing Singapore. Now, I want to close up with one final question, just mindful we're 1 minute and 30 seconds left, which is, with all that gloom and doom in the world and all that's going on in the world, I want to ask you to leave your parting thoughts about what are the grounds to be optimistic about our future. Perhaps I could start with you, 𝐸𝐸, and then we'll finish up Suhaimi. 𝐸𝐸.
Truth be told, I'm not really upbeat about our future. Because I see problems, here and there. So I'm not really optimistic at this point in time. But I do hope that leaders of the world will do more in promoting peace, do more, for our planet, and therefore can leave, a better planet, for our children.
Thank you, 𝐸𝐸. Suhaimi, bring us to the finish line.
Wise advice, 𝐸𝐸. I am an optimist by nature, so if you ask me anything, I'm always optimistic. What I would say is, I think one thing that we should learn, and what I've learned over time, is you should never bet against humanity, right? We always find a way. We find a way to resolve problems, and whatever the scale of the issue may be. So if you talk about climate change, I'm optimistic that we're going to solve it. Yes, we're not moving fast enough, but we will. We will discover the solutions, the technology, we will find the motivation. So in all cases, whatever it is, if you talk about uncertainty and risk, it's always there, right? Which is why, that's what we do. We manage risk, we identify risk, and we try to make money out of it. But there's always risk. Is the next 6 months going to be good or bad? Who knows, right? It may look gloomy, but you could surprise you. Most of the time, predictions come out wrong, right? It's 50-50. Who knows? But what I would say is, I am optimistic. I think that the last 12 months has been tough for most people, but we're probably closer to the end, as they say. It's always darkest before the dawn, and I think there's a dawn out there coming.
Suhaimi is definitely running for public office. Take that as an addition for public office. But thank you for the range of views. Thank you to everyone. I think we're out of time, but appreciate you, gentlemen, for joining me today at South Asia. Thank you. Let's give them a big round of applause.